Hey traders, Jonathan Rose. So really cool trade setup, really cool trade follow through that I wanted to share with you. September 14th, 11 days ago, I put out a video talking about the yield curve, talking about the bond trade, the correct way to trade bonds. We talked about a spread, ZB-UB. It's got a really funny name. It's called the BUB. In order to trade the BUB, if you want to sell it, you sell one ZB and you buy one UB. If you want to buy the BUB, you buy one ZB and you sell one UB. So I want to go over a snippet from the video sent out September 14th, and then let's look at that trade today and see how it changed. So here's the video from September 14th. The best way that I would take advantage of this opportunity right now is I would do a portion of the butterfly. So right now the ZB is expensive relative to the ZN, relative to the UB. Here's how I would trade it. I would do one portion, and I would do the ZB against the UB. I know I definitely want to sell ZB. I don't want to sell ZN. I don't want to sell UB, right? And look what's going on here. So if I just look at the ZB against UB, one portion of the butterfly, I could see that's very expensive. That's what I'd want to do. I'd want to sell one ZB and buy one UB in order to take advantage when all of a sudden this calms down and pulls all the way back. Just like it did down here where it rallied, I think the same thing's going to happen here, and the ZB-UB is going to trade all the way down here. That's exactly what I'm looking at. Okay guys, so now it's the same exact chart, ZB-UB, but instead of it being September 14th, we're 11 days later, it's September 25th. So I thought it'd be really valuable to show you exactly how this trade worked out. So again, 9/14, ZB against UB, it's just ZB minus UB. This is a relative value trade. We're trading the difference between those two instruments. We shared, and it was trading at, right around this level here, -12.6, 30 seconds. Right away, it came off really, really quick. Couple of days later, it rallied. It's never going to be easy. And then finally, really, really starts to come off. So this trade ended up working this side of the trade. Now, if you go back and listen to the original video from 9/14, the reason we were selling ZB-UB was because the 30-year butterfly was expensive. Well, the 30-year butterfly, at least in my opinion, is still very, very, very expensive. But the ZB-UB portion has come off. But the other side, the knob, the 10-year ZB, is very inexpensive. So yeah, we made the right call that this side of the butterfly was really going to come off. But now, and what I'm working on with my bond students, is we're looking at getting long that knob, because right now that knob is presenting really good opportunity. So just like in ZB-UB, where we're selling ZB and buying UB, when we do the other side of that butterfly, of the ZB butterfly, we're buying 10-year and selling ZB. So I wanted to see, came off really quick, it rallied, and then really starts to sell off. So all about getting on the right side of the trade, using common sense, and really understanding how to figure out those little kinks in the yield curve. If you want to learn more about this trade, you guys can email me, Jonathan@ActiveDayTrader. Anytime, I'm happy to discuss. If you want more information about Infinity Futures, just email my guy, Patrick. I'll leave his email on the screen as well. Thanks a lot, guys. Hope you enjoyed the video.